40 million ounces of silver manipulation. The foul smell of desperation is in the air. Nearly 40 million ounces of paper silver were launched to the COMEX yesterday in the space of 7 minutes, which had triggered a 92-cent waterfall in the price of silver. Over 118 million ounces of paper silver were dumped on the COMEX today, April 22nd, between 11 a.m. and noon Eastern. This market intervention typically occurs after the bona fide physical precious metals in the Eastern Hemisphere have shut down for the day. The baseline assumption of modern financial theory is that fiat money is sound and that markets are efficient. Neither of those suppositions are valid. The markets have been completely stripped of any legitimate price discovery function. You can't tell me with a straight face that Tesla, which is now burning cash at a rate of $500 million a year, is worth $33 billion or 8 times revenues. Any more than you can tell me that junior mining stock worth $500 million in proved gold and silver resources in the ground is worth only $24 million. Gold and silver have been climbing a wall of worry for several weeks now. The traditional signs of an imminent manipulative attack on the metals, open interest of shorts versus longs on the COMEX charts, formations, etc., have defied the behavioral patterns of the past 15 years. Several chartists and Wall Street analysts, notwithstanding their boorish market prediction revisionism, have been humiliated by the price action in gold and silver since mid-January. Several of us who have researched, traded, and invested in the precious metals market since the inception of the precious metals bull market believe that the bullion banks may have a bigger problem with sourcing physical silver for deliveries right now than with gold. The COMEX bullion markets have been hitting the price of silver hard, with paper contracts the last 2 days in a desperate effort to beat down the price appreciation of silver during the overnight physical market activities of the Eastern Hemisphere bullion markets. Currently, there are 56,863 open May silver futures contracts, representing 284.3 million theoretical ounces of silver on the COMEX. Against this is 31.9 million reported ounces of physical silver in the COMEX that have been designated as available for delivery against these open contracts. In other words, the bullion banks have thrown nearly 9 ounces of theoretical paper silver at the market for every 1 ounce of alleged physical silver that could be delivered into these contracts. Tuesday is options expiration day for May COMEX gold and silver options. Typically, options expiry is one of the triggers for a heavy onslaught of bank manipulation on the COMEX. With a brief glance as the put-call open interest in May silver options, it looks like the bullion banks, i.e., the entities that are short May silver options, are motivated to push silver below $17. Based on the amount of open calls versus puts at $17 by the close of silver trading on Tuesday. Similarly, first day notices for COMEX gold and silver contracts go out after the close next Thursday, with paper open interest in silver as of today 900% greater than the amount of physical silver designated as available for delivery. The COMEX bullion banks will make every effort to shock and awe the hedge funds into liquidating their paper silver positions. We saw this yesterday with 92-cent silver smash going into the COMEX open. Silver open interest dropped over 14,000 contracts yesterday. This is one of the many manipulation games the bullion banks have been playing with the hedge funds over the last 15 years. Because the CFTC and the Justice Department look the other way when it comes to enforcing market regulations, as they should apply to the COMEX, because those same regulations are actively applied to every other CME commodity product. True price discovery in the gold and silver markets has become an impossibility. But we have 5,000 years of historical evidence which suggests that market interventions always fail, and when they ultimately fail, they fail spectacularly. India's jewelry industry is reopening after a strike since March 1st that shut down India's gold import machinery. A sleeping elephant is waking up, starved for metal, as India heads into its second largest seasonal buying period of the year. This will make it more difficult for the banks to manipulate gold and silver prices using paper, which means the illegal trading activity of the next few days may be the bank's last opportunity to cap the metals until India goes back into hibernation in the summer. Thanks for listening. Take care. Keep stacking.